End of the day with Ray. Hello, my friends. Well, today we're going to get on the Sharp Interactive board and we're going to go through Ricoh's first quarter results for fiscal year 2022, which ends March of 2023. As I look through Ricoh's presentation, I have some questions. I'm going to ask those questions in today's video. Also have some concerns. Ladies and gentlemen, I believe Ricoh is pretty close behind Konica Minolta, and I believe both of these organizations have a potential to drive right off a cliff. It's my opinion. When I look at these financials and I look at what's missing, it scares me a little bit. But the biggest thing that scares me is the lack of consistent operating profit, and more importantly, how they aspire the future operating profit and what they're currently talking about regarding their services deliverable. Ricoh has a objective that very soon office printing will only represent 35% of their business. They're focused on these services. They're focused on these services in a lot of talk, but I don't see the walk matching the talk. I will say this, that Ricoh has a lot more details about these services than our friends over at Konica Minolta, in my opinion. But I think they have to have a little bit more. So without any further ado, let's jump on the Sharp Interactive board and let's go through Ricoh's first quarter. First thing I want to do is I want to go back the 2 years prior to this first quarter even starting, like I did with Qtr and Konica Minolta. Let's just talk about this real quick. In those 2 years, the total revenue was $23 billion, and the operating profit was a $40 million loss. So the 2 years prior to this first quarter, the operating profit loss was $40 million. Top line revenue, 2 years combined, was $23 billion. Folks, this is important. A lot of people ask me, not a lot of people, a few people said, well, Ray, what do you care about what they did the previous 2 years? And quite honestly, those previous 2 years are very, very concerning. Because those 2 previous years, they had some situations, global pandemic, chip shortages, supply chain issues. But folks, I believe we're just in the eye of the storm. I believe that the next couple of years are going to have some pretty big challenges. And so if we didn't do well in the last 2 years, how are we going to do well in the upcoming years? The party of disruption is not over. It's just starting. So let's do some comparisons here, folks. And the first thing I'll do is, where are they at here at their top line for the first quarter? $3.4 billion in revenue, operating profit of $71.5 million in profit, which was 2.1%. Not enough, but it's above the line. So we got to say congratulations for getting above the line. But look at over here at Qtr. Qtr did $3.7 billion, so their revenue is about the same for their first quarter. But their operating profit was $317 million, 8.4%. Double that, triple that, right? Folks, 2.1% when you're aspiring to do all these other things in IT services and all, it's something's not making sense. And I believe what's not making sense is you're not charging enough money and you're not managing your cost in those other things outside of print. And this is a cautionary statement to all of my friends, especially these mega dealers that are getting into IT and all these other services. You can't allow the revenues and profits from print to disguise what could be really bad management. Because we all know where print's going, right? It's revenue and it's operating profit. Pretty much starting to fall off a cliff. But I think that's a great comparison. I mean, how are you going to be able to do all of these things, Ricoh, if you can't get that operating profit up? I know you got some projections, and we're going to talk about those in a little bit. So let's look at this slide. And folks, the reason I put this slide in here is simple. I want to read something to you. Striving to capitalize on growth investments in Europe. Ricoh went on a buying spree very similar to what Konica Minolta did here. You know, they went around and they bought up, they filled a shopping cart up with all these things. They bought DocuWare as an example. You know, they're buying up all these services, software platforms. They're going to go out in the marketplace and do all these great things. But I got a question. Back in the late 1990s, early 2000s, Ricoh, you went on another shopping spree. This was all pretty much print-related stuff. You bought Lanier Worldwide at one point, right? You bought Ricoh, or excuse me, you bought Icon. And guess what? In 2018, you did a $1.4 billion impairment charge. You contributed that impairment charge to the miscalculation of Icon, pretty much. And you said that the goodwill around Mindshift, too, was questionable. The IT services company you bought from Best Buy. But for the majority of that was print stuff. It was your core business. The question is, if you couldn't integrate the acquisitions around your core deliverable, how in the world are you going to integrate all these things that have nothing to do with the core deliverable of print? And when I look at the numbers and I look how you display these numbers, I have some concerns because it seems like you're trying to deliver services kind of like you deliver products. And that's just not going to work. And you're not going to be able to integrate these two worlds together. Let's talk about this. So Ricoh Digital Services, this is the office services. I will give Ricoh some credit here. I believe that they outline and detail out the different buckets, if you will, a lot better than Konica does. So I'm going to give them that. You know, they have the infrastructure bucket, which is hardware and software. By the way, that was $371.5 million for the first quarter. IT services bucket, $235 million for the first quarter. Applications, $190.2 million. Business processes, $271.1 million. And others, $45.5 million. I hate when people classify something as others. I mean, think about it, others. You're all in the meeting together, all the executives for all these different groups. And all of a sudden you get to the end, you're like, oh yeah, what about the others? What did you guys do? Ah, you lost money, okay. When you say others, it just means to me that you haven't clearly defined what the deliverable is. Otherwise, you would call it what it is. And folks, here's the other concern I have. IT infrastructure, hardware, and software is the biggest part of the bucket, $371.5 million. That's telling me that the services business, the biggest part of the bucket, is selling products. How much of that's hardware? How much of that's software? IT services, in my world, should be the biggest part of the bucket. It's $235 million, but it should be way above $300 million if IT infrastructure is $300 million. The service is where the money is, and also the services is where the operating profit should be. Big profit in there, right? And I think it's great that you share the revenues, but I think what you really should share is the operating profit of each one of those buckets. Because I believe if you did that, the pure pressure to make that stuff perform, well, would probably get it to perform. It would allow you to really look at this and decide really where your costs are in line with reality. You say in this presentation that the cost for human capital is growing, especially in the IT services arena. But where's that growing? Is it growing for the people that are selling hardware? Is it growing for the IT services? Are you hiring compliance people? It costs you lots and lots of money so you go out and sell $200,000 assessments without managing the operating profit of those different buckets. I think, quite honestly, you won't manage it with the details you need. Just my opinion. Let's go on. So this is the office printing and office services together, and I have a concern right here because office printing, which was $1.6 billion of the revenue for the quarter, had $117.3 million profit, which was 7.1%. Office services had a $1.1 billion revenue, okay, and it was a $55.3 billion profit, or 5.3%. That's concerning. Office services should have a whole lot more profit, should have a whole lot more profit percentage than office printing. It should crush it. And unfortunately, it seems that at Ricoh land, having these single-digit operating profits are something you can live with. And quite honestly, you're not going to be able to live with it because you're not going to have enough money to do what you need to do to make these things deliver successfully, let alone remarkable, into the marketplace. This is a little bit concerning to me. Office services represents 40% of this business. And at the end of the day, as you grow that to the bigger percentage that you aspire to do, you better grow that operating profit. You got to double it. You got to double it. and without sharing that and managing that and making that accessible for everybody in the world to see, giving you true accountability, I don't think you're going to get there. This is their initiatives for Japan and overseas, and you can see overseas, and that would be everywhere but Japan, right? But look at all the stuff they acquired. They did a nice job kind of outlining that. I appreciate that, Ricoh. You know what would be really cool is if you went on there and said what the revenue of all those companies you bought was. What did you acquire since 2016 or 17? What was the revenue of those companies? How much of your current revenue did you just buy? How much was organically grown? How have you grown these acquisitions since you bought them? Those would be fantastic numbers to share. And it seems to me if you were killing it, you'd be sharing them. We bought DocuWare, it was doing X, and now it's doing this. Look at the operating profit on DocuWare alone. It's fantastic. Folks, there's a reason you should do this. Well, one is you're a public company. But two is when you do this, the pure pressure of doing it would make these things perform like in nobody's business. I'm sure they would. This is an interesting slide. This is the pre-pandemic printing volumes. Their aspirations are to get to 83%. Folks, they're nowhere near it everywhere in the world. There's the 83%, the red line. The red line. Look where we're at here. People aren't printing, folks. They're not going back. This is what's so concerning to me. This is what's so concerning to me. If we can't integrate these services profitably, sooner or later we're going to run out of the revenue and the profit to help us try to deliver services profitably. Ricoh Industrial Solutions, 70% of the total revenue, lost $5.2 million. So it's safe to say without this business component, Ricoh would have put $5.2 million to the bottom line. Do they need to evaluate whether they need this component or not? Should they get out of the business? What do you want to do? What's your real goal in the market? Folks, you can't diversify into things that don't make you money. You can have an investment for a period of time, but eventually it's got to make you some money. I mean, look at our friends over there at Konica Minolta with that healthcare business. It's killing them. It's eating their lunch. Is this going to be something that eats your lunch? Is this something that's going to eat into the money that you need to deliver remarkable IT services, as an example? Something to think about. The thing that's just not even managed probably, lost $22.3 million on $62.6 million in revenue. It's safe to say that without that business, you'd have $22.3 million. You'd have $27 more million in profit if you got rid of those two things that are sucking the life out of your company. Over here, some interesting stuff. You're talking about doing infrastructure sensors and stuff. You know, this is kind of what LQ and Xerox are doing. You know, my question is, are you going into these markets like it's trying to win a print deal and just giving the stuff away? How did you lose $22.3 million? Good question, right? I think it's a good question. Let's look at this slide. This is their projections. And this is really interesting to me, folks, because I want to compare them again to my friends over at Qtr because their aspirations on top line revenue are pretty damn close. Qtr wants to do 2 trillion yen, which is 15.2 billion. Our friends over at Ricoh want to do 2 trillion 50 billion yen. But here's something that I want everybody to pay attention to. Qtr, yeah, we want to do 15.2 billion in revenue this year, but we also expect to have 1.3 billion in profit. There's a big difference there, right? They want to have an 8.7% operating profit. Our friends over at Ricoh, they're saying, hey, if we get 90 billion yen, we're happy with that. That's about 675 million. It's half. Really? You're into services, IT services, infrastructure, all the stuff you're trying to do, and you're going to be happy with 4% operating profit? Why is that? Why is that? And in all reality, Ricoh, I don't think you can hit that number, which means you got to cut more costs. Maybe those last two business units that were losing you all the money. But at the end of the day, I don't know how you're going to get there. So let me just show you this slide. So I found this out there, and this they title this 10 years of growth. This is from Ricoh itself. This is the sales revenue, 10 years of growth. Here's what I don't understand. You could say it's 10 years of growth, but the chart doesn't show that. The chart shows 1, 2, 3, 4 years of growth and 6 years of flat and falling. 4 years of growth and 6 years of flat and falling. Not 10 years of growth. You can tell yourself you're growing, but that doesn't necessarily mean you're growing. Let's look at the operating profit. 10 years of growth. This is 10 years of holy crap. I feel like I'm on a roller coaster, right? It's like, there's no 10 years of growth here. Right? I mean, come on, folks. So look at this. They want to do 90 billion yen, okay? 675 million in operating profit for this current year they're in, which ends March of 2023. Folks, let's go back in history. Since 2013, they hit over 100 billion yen once. It was in 2015, 102 billion yen. They came close in 2019 at 86.8. In Ricoh's mind, they believe that the year 2022 for them, which ends in March of 2023, is like 2019. They think this thing's all over with. They think that we're free because everybody got vaccinated, there's no more virus. The chips are coming back. Folks, this is scary. Because in order for them to hit that 90 billion, they got to do 27 billion yen every quarter for the rest of this year. There's 3 quarters left. They got to do 27 billion. That's triple almost what they did their first quarter. Do you really believe they can do this? I don't believe they can. Just like I don't believe that Konica Minolta is going to hit their projections. You know who I believe will do it? I believe Qtr will do it because they do it. But look at this. Who in their right mind allowed that slide to go out with 10 years of growth? That's the scariest looking operating profit slide I've ever seen in my life. In summation, my summation of all this. Talk and walk not matching. My opinion. And we see this a lot with some mega dealers. They got the talk, but their walk is like, what the hell? They talk about all this great stuff they're doing, but then when you watch them walking, it's like, wait a second, that's not matching up. Ricoh's still struggling, delivering profit consistently, and this has to change. This isn't working. It needs to. I'd rather see it flat. This is just nuts. I fear we're going to have another big impairment charge with all these acquisitions that you made over there in Europe and this IT space. When Ricoh gobbled up print dealers in the late 90s and early 2000s, folks, the industry wasn't falling off a cliff, and they struggled at implementing their core deliverable. They struggled at implementing their core deliverable assets. They bought the same thing that they were good at, and they struggled. What makes Ricoh believe things are different now, especially as print is 20% down in volumes and the market is shifting to lower price A4? And by the way, does Ricoh even really have an A4 product line? What's different? In closing, I see Ricoh as a revenue chaser without real regard to profit. That's too dangerous as we approach new challenges. Geopolitics. Look what's going on right now. China, Taiwan, Ukraine. Folks, geopolitics is going to play a big role in our future. It's not 2019. I believe that right now we're in the eye of the storm. And it's going to be those organizations that could have performed, that did perform during the last storm, probably have better odds of performing than the one that's coming. Interest rates rising. Folks, there's so many things that are facing our industry. Doesn't mean we can't accept these challenges and head on and defeat them, but we sure as hell can't defeat the challenges ahead of us if we don't have the money it takes to do it. We sure can't defeat a declining industry if we run around and give everything away, if we chase revenue as opposed to chasing profit. Just some things to think about, my friends, because we all know this. Status quo is the killer of all that'll be invented. Don't get status quo, and I'll see y'all tomorrow.